Hey folks, welcome back to the channel. Just want to do a sound check here, make sure all my sound is working. And I selected the very first comment to come up to highlight, to put it on the screen for a very good reason. Elon's is a frequent attender of my live streams. And he says, it's always darkest before the dawn. Buy, buy, buy. Like I said many times, I don't give advice to buy, sell, or hold any particular security for your individual portfolio. You're not able to give advice, actionable financial advice on a YouTube channel. But let me say one thing here: dawn is going to happen when most people in the stock market still have their shades drawn, and they're not going to know that dawn is happening. Like I said many times, the bear market ends far sooner than the recession does, and most people end up getting caught outside of that. I'll say that again: the bear market ends much sooner than the recession does. In the last major recession that we had, the bear market ended a full 8 months before we saw positive GDP growth, meaning that GDP was shrinking for 8 months while the market made 57%. Okay. So that's a very prescient thing to say. It's always darkest before the dawn. Buy. Dawn will happen while most people have the shades drawn. So let's talk about a few things that are going on today. NASDAQ broke an important, I assume you mean an important support. It did and it didn't. Let's talk about why this is happening today and why it's not really such a big deal. So the big news today in the market, and I haven't even checked today's markets. It was down when I looked earlier. I always check kind of right as I get on these live streams here. Let me go ahead and share my screen here. So yeah, let's take a look at that. All right, so we're looking at the Dow being up roughly 62 points right now. The S&P is down roughly 29 points, so they're essentially flat. The Russell 2000 down 1.6, and the NASDAQ 100 down 2.1. So the losses are mostly concentrated in the NASDAQ, and for very good reason. Tesla actually got crushed today. But one of the things that is pretty certain here, it's Tesla's not being crushed on any Tesla specific news. In fact, the news surrounding Tesla is actually fairly positive. They've made a lot of progress getting back to somewhere close to full production in terms of Giga Shanghai. But the big negative news today is really Snapchat and the warning that they sent to employees saying that they weren't going to meet quarterly expectations. Folks, that actually we were previewed with that at the very beginning of the year. Okay. Let me talk about why. Like, this is not a surprise to me. Every company, Google did not really meet advertisement expectations. Snap is not going to meet advertisement expectations. Facebook is not going to meet advertisement expectations. Basically, nobody is right now because they're all trying to have to find they're all going to have to try and find a new way to target advertising because of this. The new Apple privacy policy has cost tech platforms $10 billion in lost revenues. So this is, Apple's privacy policy, which fully manifested with the release of iOS 14.5, have already cost other big tech firms nearly $10 billion in lost ad revenue. Advertising technology research firm Lotte reports that Snap, Facebook, Twitter, and YouTube have lost a combined $9.85 billion thus far in third and fourth quarters of the year. So this is last year that this was put out. Okay. So we know this was coming now. They have not made Twitter basically hasn't made money in the last 2 years, but the last couple of quarters have been tough for Snap, Facebook, and YouTube because of the lack of the ability to really target ads like you used to. And the new Apple privacy policy is referred to app tracking transparency. It requires app developers to obtain permission to use the device's unique IDFA tracking number. And this comes in the form of a mandatory pop-up, the text of which is dictated by Apple. And I'll be honest with you, the text is kind of scary, and most users look like they're opting out of it. And users must be presented with the apps when they're downloaded or when the app is already installed and updated. If the user chooses to opt out, the app publisher must deliver the same level of service minus the targeted advertising. This has been dubbed the adpocalypse. Advertisers have been dreading this for a while. Projections were that as many as 90% of device users would drop out of the targeted ad ecosystem once the new Apple privacy policy went active with iOS 14.5. And marketing studies have since shown that it's likely settled around 70% to 80% somewhere. So, what that means is that all of these advertisers are going to have to find a new way to target ads. Now, I have even noticed that in my specific businesses that I'm involved in, that ad targeting has become a little bit less productive. And oddly enough, I'm actually working with someone right now that does targeted ads, like local targeted ads for like mailing, but he uses really sophisticated metrics to find that. And I'm able to drill down so minutely. Like I can look for professionals that make more than $120,000 a year that have two kids and a parking space. I can literally get that granular when it comes to advertising with this. And this person is probably looking at what's going on in the adpocalypse right now and wondering what's going to happen to their business as well. So, is this bad for all of those businesses that are involved in advertising? Yes, it's absolutely unqualified bad. Does it say something about the wider economy? In this case, I think it says less about the wider economy than it does this change in Apple policy and how that's shaking out over time. Even if you had a device or an app downloaded to your Apple device, once that app updated, then you were forced into this screen where you had to give someone permission to do targeted advertising. Apple controls that text. It's not very welcoming, and 70% of people are opting out of that. So what does that mean? I'm thinking that people that use Android devices, and Android has not followed through exactly with this, are actually going to have a bit more in the way of ads that are targeted to them. They're going to be seeing more of what they want to. So I don't know what that means for advertising revenue. Like I think that my advertising revenue through YouTube is probably going to go down quite a bit as well. So speaking of that, super chat features are on if you feel so inclined. I will not be on as long today. I have to hit the road here pretty soon and go pick somebody up to make it over to one of my businesses so I can help train them. And so there we go. People should keep their money. Shoeless Joe says, "Hey Jason, hey Shoeless Joe. Lots of negative news about the SEC and China negotiations for delisting. That is news that I have not seen yet, and not seeing that kind of top of the list here for news either. It's really about Airbnb in China. And Airbnb in China, the reason that Airbnb is pulling out of China really has everything to do with the sort of never-ending lockdowns. Let me see here. Not seeing a ton. Here's an interesting article on Tesla stock is down. It isn't Shanghai or Wall Street. It's Snap. And I tend to agree with that assessment. Technology, things that are bad about technology tend to infect one another, but down 6.93%. Tesla is falling again Tuesday trading. The likeliest reason isn't related to the EV maker Shanghai plant or even price target actions at brokerages. No, the drop is likely because of Snap, right? Snap warned investors that revenue will be weaker than expected. So, the macroeconomic environment has definitely deteriorated further and faster than we expected when we issue our guidance in the second quarter. So even though our revenue continues to grow year over year in second quarter, it's likely that revenue and earnings before interest, taxes, depreciation, and amortization will come in below the low end of our guidance range. So that's what they're saying. So somewhere between 1.179 billion to 1.228 billion, they expect to be, they expect to be under at the low end of that range there. So that I think is probably what had a greater effect on everything else on the NASDAQ. You notice that the drop in the market was pretty much contained to the NASDAQ. So, and Hawk, this is actually incorrect. Apple has 50% of the smartphone market, but Apple app users more valuable to advertisers. Apple actually only has 14% of global smartphone users. Now, that number portion may be a little bit higher in the United States. I'm not actually sure, but I was just doing the research on this last week. So Apple literally only has 14% of market share globally. So yeah. Daniel says, do you think the Ukraine war will end abruptly or a long grind? And if it does, do you think it will positively affect the market? So definitely not a military expert here, but what I do study is industry, economy, and supply chains. And there's a problem with the Ukraine war. We are only getting if you are a on Ukrainian side right now, then there are some bad news that should probably upset you. Um, Russia is doing what Russia does, which is artillery walk their way across countries and destroy everything that's there, all the civilian infrastructure and everything like that. And the reason they can do this is because they actually have substantial industrial capacity to keep producing all the dumb munitions they need. And they have reserve capacity in terms of old equipment as well. And they have tons of it. They still have tons of it. And 140 million people that they can support their war machine. So I think it is going to be for a going for a long grind. The biggest issue when it comes to the Ukraine war is going to be food security. I think that the issue with fuel supply is actually going to be less impactful than most people think. I think folks will rapidly get used to, to if not $6 a gallon gas like we have out in California, they're rapidly going to get used to $4 a gallon fuel, and that's going to continue for a while until producers here in the United States get greedy and they're able to overcome the objections from some of their shareholders and start producing more. So I was doing some research on drilling permits too and drilling rigs. And right now, the United States has more active drilling rigs than not any other country, than all other countries combined. Right? And that is not an exaggeration. They literally have, between the United States and Canada, that is something like 2/3 of all drilling and exploring and pumping going on in the United States or in the entire world right now. So, the real fact of the matter is that new drilling really hasn't started in earnest, and that's largely because of demands from shareholders. They are demanding to be paid back. They want higher dividends and they want share buybacks, and that's one of the things that that oil company executives have been telling us for a while. So I think that this benefits oil to a degree, but eventually oil producers are like crawdads in a bucket or crabs in a bucket. And if you have ever been fishing, you might know what I'm talking about. As soon as one starts to crawl out, the rest of them pull it back down. Somebody eventually starts producing more to gain more market share. Maybe they do that on, in secret. Maybe they do that on purpose, but that's what's going to happen. So, yeah. What do you make of Biden's recent confirmation that the U.S. would defend China if attacked? The Taiwanese defense minister has said China would be combat ready by 2025. Does this concern you? Not really. Joe Biden said that because that's what he's supposed to say. We have made that commitment. And if we didn't confirm that commitment, it would be confirmation that we weren't serious about defending Taiwan. So, and it makes total sense that his administration backtracks on that later. The whole idea of that was a mixed message. At least that is my assessment of that. And yeah, so I think he's kind of correcting the mistakes that we made with Ukraine, if you can call that a mistake. Like I think that Russia is desperate for Western involvement, especially economically. Russia has not been allowed, to be at the table with the big boys now for quite some time. Meaning the West has really not paid any attention to their economic concerns. I'm not even saying that they're justified in feeling that we should be paying attention to their economic concerns. They have not. Their government has not done a good job in investing in the future of the economy of that country. The wealth is really concentrated in about 4,000 families. There's been some really good research that's come out recently about the distribution of wealth in Russia, what that means. And what that means for their ability to prosecute a war based on how much they can make, right? So they can eventually overwhelm a country like Ukraine just by grinding and grinding and grinding, as long as they don't have any sort of internal rebellion. The idea in the United States that we're getting through media is that Russia's economy is ready to collapse. I believe that it's ready to collapse. I don't believe that collapse necessarily means a collapse in civil society. Their mentality, shaped by years of propaganda, is very different than our mentality and Western mentality, which is also shaped by years and decades of propaganda. So the idea that we sitting here in the West on the internet, watching our news sources, even if we speak multiple languages and can get it from multiple sources, it doesn't mean we really have a clear picture of what's going on. Yeah, and the intelligence estimates that you are getting from sources, remember, a lot of that is propaganda as well. So it's very hard to get a very clear vision of what's going on in Ukraine right now and what that means for the global strategy going forward. But it does produce some interesting economic effects. food prices for quite some time look like they're going to be quite high, particularly in the way of in the way of fertilizer prices. So fertilizer is very interesting. We can produce a lot of that. There are a lot of countries that can produce a lot of it. It's just that they haven't done it for a very long time. So retooling operations to produce fertilizer, and not only that, produce the shipping that we need to move fertilizer all around the planet. That's going to be kind of a big issue. Yeah, so that's one of the things I'm worried about right now is fertilizer, and how does that affect the crop later on in the year. If you we're really going to see the effects on grain shipments, probably like the August, September, October timeframe. That's when those grain shipments have been grown, but we're going to see decreased yields because there isn't as much fertilizer to go around. It's not that there's no fertilizer, there simply isn't as much to go around. So, yeah, a lot of things that I've been thinking about recently, but the recent confirmation that Biden made that the U.S. would defend Taiwan if China attacked. Uh, I think that's really obvious. That had to be made at this point, right? That's a distinction that had to be made. So one of the things that I wanted to cover here also is inflation. So there's a bit of a discrepancy here when we're looking at inflation numbers between the consumer price index measured over a 12-month percentage change and the consumer price index measured on a month-to-month consumer change, or month-to-month change rather. So if you look at the last month's number in April, basically the CPI for all items was up 0.3% in April. This indicates on a 12-month average. Look at the all items here, 6.2%. All items. This is excluding this is all items excluding food and energy, up 6.2%. With food and energy, that's 8.3%, which is a slight decline for the month prior to that. But when you break this down a little bit further, and let's take a look here with this Market Watch article by Mark Hulbert, inflation may be a lot lower than anyone thinks, even the Fed. Focusing on the monthly rate of change in CPI shows prices falling from March to April. Okay, U.S. inflation in April plunged to an annual rate of 4.1%, less than half of what it stood in the prior month. This will no doubt come as a surprise for those of you who are focused only on the financial headlines. They informed us that the consumer price index dipped slightly in April to 8.3% from 8.5%. This modest decline was less than what Wall Street had been expecting, and on the day it was reported, the S&P 500 fell almost 2%, while the Nasdaq lost more than 3%. But the headline CPI number focuses on its 12-month rate of change. If you focus on the monthly rate of change, as shown in the chart below, then it becomes readily apparent how much inflation dropped from March to April. So, and this is an interesting name for the graph. Will the real inflation rate please stand up? And this was sourced actually from the St. Louis Federal Reserve Bank, which the St. Louis Federal Reserve Bank, for some reason, it seems to be on a lot of the charts that I'm getting here. So the CPI's 12-month rate of change is inflated by big jumps in June and October of 2021 and March of this year. As a result, the 12-month rate of change will remain high regardless of what happens over the CPI for the next couple of months. One illustration of this is even if the CPI had remained unchanged from March to April, then the headline number for April still would have been 7.9%. This puts in current discussion about the current discussion of inflation in an entirely different light. The month-to-month inflation rate doesn't have to get any lower than it was in April in order for the CPI's 12-month rate to fall to 4.1% once the past year's big spikes in inflation drop out of the trailing 12-month period. Until those spikes drop out of the calculation, the headline inflation number will be stubbornly high, not because the Federal Reserve is doing a bad job at fighting inflation, because of simple arithmetic. This is actually a huge problem that I encounter all the time, is that people don't really have a good idea of how data actually works. They don't really have a good idea of how math works, and a really good idea, particularly even people who are good at math, don't necessarily have anything more than a very shallow understanding of statistics. Now, this is the sort of data that I've been hoping for. It isn't definitive by any means, folks. Okay, we need a few more weeks of inflation data to come out, a few more months of inflation data to come out. But this could, trust me, though, the Federal Reserve is looking at this. They're just, because they're the ones who made the graph, but they're not necessarily talking about it. What they want to see is a bit more of a trend here. So, very encouraging news when it comes to inflation. But let's talk about the things that are already happening. We are already seeing the bottom drop out of the real estate market here in terms of the number of people that qualify to buy a home, largely because interest rates went from approximately 3.25% up to 5.3% in less than 2 months. That cut out 30 to 40% of borrowers, right? Not in every market, but in a lot of markets, 30 to 40% of buyers can no longer afford to buy a home, right? So, and I hope you guys caught my video this morning on inflation induced debt destruction. If you're a young person like a millennial or Gen Z, and you don't understand why you haven't been able to buy a home yet, you don't understand why your boomer parents and grandparents are so much further ahead of you at this age than you are, take a look at that video. And that goes a long way of explaining why or how debt or how inflation induced debt destruction benefited your boomer parents and grandparents, and why they're ahead of you. It has nothing to do with their genius. Just take a look at that video. All right. Yeah. So those are a couple of things that I'm thinking about today and looking at today in terms of the market and in terms of news. This is certainly good inflation, not definitive. So was April's inflation rate the exception to the rule? This relatively sanguine assessment of current inflation assumes that CPI's percentage change in April persists in the coming months. This would not be a good assumption if the April rate was artificially low, and we don't know that it was or it wasn't. But yeah, and we don't know what's going to happen with oil prices as well. I have factored in oil prices hitting into my personal calculations, oil prices hitting up to $150 a barrel by the end of summer and then declining from that point. Um, as we see, yeah, let me see here. I got a comment here I want to highlight. So Ally Financial seems very cheap. So I haven't looked at Ally Financial in a while, but most financials right now are collapsing back to mean. Let me see here. Mean price to earnings multiples. So if I look at Ally, where's Ally? What's Ally's symbol there, buddy? Is it okay? Ally Financial. Let's take a look real quick at price to earnings multiples on this and see how that's collapsed at this time. So earnings per share, $7.09. PD. Oh yeah, it looks definitely very cheap. Let's take a look at some of these other numbers. For some reason, whenever I'm streaming, my internet is very slow. Not for some reason, it's because I'm streaming. So let's take a look here at 1 year numbers. We're seeing a decline, not bad. And I got to wait for some of those earnings numbers to fill in. But we're looking at forward dividend yield of close to 3% at this point. I haven't seen any talk of decreasing dividends from anyone at this point, which that's going to come, especially if we're seeing margins be impacted. You might see certain businesses, certain industries, especially in consumer staples, if they're paying a dividend, you might see them start to back off on those dividend payments. So we're seeing earnings beats or meets for the last couple of quarters. We're seeing declining revenues here going forward as the lending environment started to deteriorate. So and this is earnings per share. Nothing too surprising. We'll see this flattening out here. And as earnings, as the interest rates start to rise, we're actually going to see sort of a reverse and uptrend on this as we go forward. So I don't know that much about the business, but you are correct. The earnings per share multiple has collapsed on this to basically half of what it probably was a few months ago. I think historically, banks in the long run would trade around 12. Like the S&P in general would trade at about 16, a PDE ratio of 16, and banks would trade at a PDE ratio around 12. Now, this is data from 20 years ago where I initially learned this. Over the past 20 years, those PDE multiples have been high because borrowing has been so cheap. If we're seeing a reversion back to mean, an earnings per share multiple of 8 is still really low for a business in finance or a bank. And we're not seeing a collapse. We're seeing a decline in earnings per share. Let me see. Let's take a look at financials here. See what they look like for Ally. And will we see more revolutions because of high food and energy prices? Honestly, I think that depends on countries like the US and being very generous, and other major food producers being very generous. I also think it depends on the US getting fertilizer to major food producers like Egypt. Egypt in the past has been sort of a breadbasket for the world. In the last couple of decades or so, they really have not been agriculturally self sufficient. But there are a number of other places that the United States needs to be very generous in terms of food assistance in order to decrease the possibility of social unrest, because I think that's possibly more damaging than anything else out there. So, income statement, total revenues. So my assessment on Ally Bank is you're probably right. That's a stock that's worth a second look here in terms of whether or not you want to make an investment in that. And I bet after market, we're probably seeing kind of a snapback and everything right now, as people are going to digest what went on with Snap, and they're going to realize that it is a bit of an overreaction that hasn't necessarily happened in Tesla yet. I don't even want to look at my own accounts because I'm getting crushed in Tesla right now, and it's a large proportion of my portfolio. Yeah, so man, I don't even want to take a look at that right now. But a PDE ratio of 84.89. This is still not a cheap stock. Let me see here. All right. So this is a good question. Is the recently approved 180-day plannable CGM enough to change the future of diabetes tech company Sensonics? So it is entirely possible the answer to that is no. And I'm not basing this on any specific knowledge of the technology that Sensonics uses. I'm basing this on my experience in the biotech industry. One product or technology being approved doesn't necessarily the other one's going to be approved. It doesn't necessarily mean that it's a monetizable product. And it just doesn't necessarily mean it's ever going to be successful or popular. So the issue with diabetes technologies is that we actually should see a lot of companies producing technologies that should be really successful and really profitable here in the United States, particularly when you're looking at basically 1 out of 5 people here in the US either being diabetic or pre-diabetic. If you go to states like Mississippi, that is a solid 1 out of 5 there. Like Mississippi, 1 out of 5 people is either diabetic or pre-diabetic. Has everything to do. It's a combination of genetics and lifestyle, meaning diet, exercise, and genetics. Senator or Representative Matt Gaetz made this incredibly insensitive statement about people who have diabetes just dieting and exercising more. Well, man, I've got a BMI that puts me at essentially underweight. I'm 6 feet tall and 175 pounds. Not underweight, but it puts me in very healthy range. I walk at least 3 miles a day. I train 3 or 4 times a week in jiu-jitsu. I still run, a couple of miles a week. And I have diabetes, and my diet is very good. And I still have type 2 diabetes. A large proportion of this is genetic, and there's not a ton that you can do about it once you get into your later 50s and 60s. Now, those aren't the people that are dependent on insulin, and I'm thinking about the thing that he voted against. But diabetes could be giant business in the US, giant business in India, particularly in South India, where I've done a lot of research on this subject, particularly in South India, where you basically half the population there carries the genes for diabetes. It's an adaptation to prior famines, and it tends to stick around for generations after those famines happen. Even though in that area of India really has not seen famine in quite some time, these genetic adaptations stick around for a while in the population that survives. So it could be other areas too. This could be big business, but in the southern part of the United States, the southern part of India, these diabetic treatments should be giant moneymakers for companies. We have not actually seen that yet. I'm hoping we will. But back to this question. India's reaction to the war in Ukraine has been disappointing to many people in the West. I don't blame them for reacting the way that they are reacting. India is a very food insecure and energy insecure place, and they have to make some pretty hard choices as far as how they want to be aligned and whether or not they can feed their population. And unlike us, the response that we had a lot of people that were angry about COVID about COVID restrictions for reasons that I'm not going to make fun of, but I wasn't very sympathetic to. India's response to COVID-19 restrictions caused starvation, meaning we don't even know how many people starved to death because their economy shut down and they weren't able to feed themselves. They are not willing to go through that again because of a country that's very distant to them that they don't have any strategic interest in. So I do not blame them for not going along with the West in terms of sanctions. They're getting oil for cheap right now, and they're probably still getting exports of fertilizer, which they desperately need. I did a study a long time ago when I was in archaeology school on the origins of agriculture in the Indus River Valley, how that works today, possibly how the cow ended up becoming revered there and its connection to fertilization and fuel. Right, cow dung in many places of the world is actually one of the primary sources of cooking fuel. I know that actually sounds maybe disgusting to people in the West, but it's true. Burning dried out cow dung creates a low fire, and it's one of the primary ways to cook things in places around the world. So they've been modernizing. India has been modernizing now for several generations, and going along with an embargo on Russian oil, Russian energy, and particularly chemicals may actually give them they would have problems feeding their population. So I don't blame them for that. That's one of those places where I don't want to see a revolution happen because of high food and energy prices. I think that there's a danger of that happening in North Africa. That's the other place that I think would be, there would be a danger of it happening. So the crops being impacted, Ukraine is not the only place that's happening right now. We're actually looking at some pretty poor yields in China this year too, due to unrelated reasons, mostly due to weather. Luckily, crop yields here in the U.S. look like they're as awesome as they ever are, and as well as in South America too. So, so at least here in the U.S., prices might be higher, but we won't suffer from food insecurity. We're going to suffer from supply chain snarling. So, Belgium is back. Yeah, after living in Belgium for a while, I know that the only supply chain that absolutely cannot be disturbed there, or there would be revolution, is barley, because beer must be supplied in Belgium. So, and if you guys have never been to Belgium, you'd have to go there to understand. There's basically a different brewery for every day of the year. You could drink a different brewery every day. You probably still not run out of all the different beers you could try in Belgium. It's absolutely amazing. If you're ever in the city called Liège, you need to go to a bar there called Vaudreuil, where at any one time they'll have about 100 beers on tap and about 1,500 to 1,800 beers, in storage you can get in the bottle. It's absolutely amazing, and they usually have like a little cheese or cracker or something paired with each beer. So it's amazing. It's a country that treats beer like France treats wine. So yes, the animator says, "Hey Jason, I just wanted to say hello and keep up the good work." Thank you. I know a couple of people in animation. I'm wondering if this is somebody that I know. Brad, if that's you, let me know. Um, yeah, so I really enjoy doing these live streams. Not sure I'm going to be doing one tomorrow. I have to drop some people off, my family off at the airport. It looks like I will be traveling a little bit here, maybe in the next couple of weeks. I'm still going to try to do some live streams, but I'm going to try and get some travel in. It's been years really since I've traveled. I want to do something here this summer. I think a lot of people feel that way, and economically speaking, I think travel is going to be a big indicator of what consumer spending is going to look like for the holiday season. So I'm a little bit worried, not about consumer spending now. I'm a little bit worried about consumer spending here around the September, October timeframe at the very beginning of the Christmas season. Not so much worried about what happens in November. Everyone buys everything in November, but a little bit worried about what happens at the first part of that Christmas season, and back to school shopping as well. So back to school shopping has basically been off for a couple of years now because of COVID. This would be the first year that we get to see some of that. So my focus is still going to be on technology because that's what I'm interested in. But in terms of sector rotation, I don't know if you guys remember the screen that I brought up yesterday in terms of sector rotation. This is going to be more and more important as we go forward. And let me share this with you. The just takes a while for my screen to show up. So if we look at market economy versus economic cycles, we're getting closer to the market bottom here, where the worst performing stocks are financials, technology, and cyclicals. And this is what you should be buying. We're getting at the bottom of this. And Animator says, hey, Jason, I am based in New Zealand and my name is AJ. Awesome. I have a cousin named AJ. He was actually born in I think near Goa, India. It's an interesting story. Parents were hippies, but his name is AJ. And let me see here. So right now we're kind of close to the market bottom. I don't know if we're at the market bottom, but pretty close to the market bottom. So finance, technology, cyclicals, technology, and industrials bleed into a full recession. And by that time, when we think we're in full recession, when we've reached that second quarter of negative GDP growth, that's when the bull market is basically over. Okay. The bull market ends before the recession ends. Full recovery from the recession is way over here, and the market top is way back here. All right. So keep that in mind as you're going forward here. I'm not going to be on as long today, guys. Like I said, I do have some things to do today, but I wanted to answer a few questions. I saw a YouTube video earlier today on Pipistrel 2-seater electric plane. I just saw the headline for that. I did not read the article, and I got very excited about that, but I still haven't read the article, so I don't want to make any dumb comments on that. So we've been waiting for this for a while, right? We've been waiting for this for a while. We've been waiting for batteries to reach that sort of 400 watts per kilogram, 400 watt hours per kilogram density in order for commercial planes to be viable, right? But there's nothing stating that we couldn't have an electric plane, that's recreational or two-person electric plane that's going to be possible, right? We can definitely do that. The problem is it's not really all that commercially viable. It serves no commercial purpose. Very few people can afford that. The storage costs on an airplane, even a 2-seater, are really high. And I know this because a long time ago, I used to work at an airport where rich people stored their little Cessna 152s. And even back then, a Cessna 152 didn't cost that much, but it was $1,000 a month. And I don't know what it must cost today, but it was about $1,000 a month just to store it there. And then running it. So actually, it was surprisingly more fuel efficient than I thought it would be. So, yeah. In terms of the recession, Ozalan says, we have played 3/4 of the basketball game. Well, I don't know about 3/4, but I think we pretty much already started the second half. And that is actually how the recession usually works, is that psychologically we are a little bit behind where the market is actually predicting where we're going to be, meaning that we think that the bear market is just beginning when the recession is just beginning, and the bear market is going to end long before the recession does, meaning we're going to have 50% gains here before. I don't know about 50%. That was an extreme example that I used in that previous video, but we're going to see very large gains before we actually see positive GDP growth. And we're probably in for one more quarter, possibly two, possibly 3 more quarters of negative GDP growth, meaning I don't think we'll see positive GDP growth until the end of the year. I could be wrong. Man, I hope I'm wrong, but I'm not too upset if I am correct about this. This would be not anything out of the ordinary. It is just the natural end of an economic cycle and the natural birth of a new one. And like I said in that one video, the birth of the new economic cycle always occurs when everyone else thinks that the old economic cycle is on life support. It's not on life support. It's already dead, right? Something new is going to emerge, and we're going to have a redefinition of what the normal economy is. So, yeah. All right, folks, that's all I have time for today. I wanted to thank everyone for tuning in. I don't know if I'm going to be on tomorrow. I'm going to try and be on Monday through Thursday at 1 o'clock every day. I may be going on vacation here in the next month or so. In that case, so I'll have some videos that I made ahead of time, but you'll probably see the live streams drop off. I'll try and do one from an airport, or not an airport. I'll try and do 1 or 2 from a hotel. I'm going to try and stay somewhere nice and warm. Yeah. Anyway, folks, thank you very much, and I will see you next time.